Greetings, members one and all of the Salivation Nation. Gold and silver are holding steady based off of a significant rise in prices late last week. On Friday, we saw a significant boost to gold and silver. And we're going to explore two different articles today that discuss on why these prices are remaining pretty steady here on the first trading day after the relatively big boost that we saw in the precious metal prices on Friday. First article we're going to look at here is from CNBC, sourcing Reuters, and gold was little changed on Monday, holding near the $1,300 mark as investors awaited further developments on the U.S.-China trade dispute and the Federal Reserve's interest rate trajectory. Spot gold was near unchanged at $1,302.69 per ounce as of 1:54 p.m. And we'll take a look at the prices as of the recording of this video's time. And it peaked to scaled earlier in this session. U.S. gold futures settled $5.10 higher at $1,309.30. The metal broke above key $1,300 psychological level in the last session after failing to do so multiple times. So it had been flirting around with that new floor. And so it broke through that ceiling of past $12.99. And it looks like it's holding pretty steady, at least as of today. Gold's gains, however, were held in check by investors booking profits following the recent rally. The metal has jumped more than 12% from a trough in mid-August, boosted further by the recently ended prolonged government shutdown in the United States. The key factor to watch for gold is development surrounding the U.S. Federal Reserve's monetary policy. But we expect it to be whole through the first half of the year, says Suki Cooper, precious metal analyst at Standard Chartered Bank. On the trade front, if we see the markets moving towards a compromise, it would be a positive development for the gold market. The dollar has been preferred by investors looking for a refuge from concerns surrounding the U.S.-China trade spat, denting bullion's appeal. Investors are bracing for a busy week with the culmination of high-level trade talks between the United States and China on January 30th and 31st. Investors are also focusing on this week's Federal Open Market Committee meeting, where Chairman Jerome Powell is widely expected to acknowledge growing risk to the U.S. economy and global momentum weakens. However, I will say that they're also speculating that he'll maybe make a statement that he doesn't expect to see a recession at all in 2019. But we may have a slower economy, which means that it may dip a little bit from the fast-growing economy that we've seen in the past year and a half or 2 years. It may pull back a bit, but it will still be growing, which will lead this to the longest expansion in quite some time for the economy. Gold tends to appreciate on expectations of lower interest rates, which reduce the opportunity cost of holding non-yielding bullion. Gold is hovering around the $1,300 resistance level, which may kindle some jitters among investors, capital economics analyst Ross Strachan said. A number of investors will find this an opportunity time to get in before the next move higher. Likely, given the state of global economy, we continue to expect prices to rise towards $13.50, he said. Bullion is likely to break $13.11 as it cleared resistance at $12.99, Reuters analyst Wang Tao said. In other metals, palladium fell 2.28%, and silver fell 9.09% at $15.73. We'll take a look at those in a moment, but let's take a look at another perspective from really a friendlier source here, Kitco. Gold hovers around $1,300 and bulls have momentum. Gold and silver prices were modestly up in the early U.S. trading Monday, and bulls in both metals have upside momentum on their side. Gold prices hit a 7-month high of $1,303.70 in February. COMEX futures overnight Both gold and silver closed at technically bullish weekly high closes last Friday, which suggests follow-through buying interest early this week. February gold futures were last up $1.50 an ounce at $12.9960. March COMEX silver was up 0.01 cents at $15.71 an ounce. European and Asian stock markets were mostly weaker overnight. U.S. stock indexes were pointed towards lower openings when the New York day session begins. There is some risk aversion in the marketplace to start the trading week, which is also benefiting the safe haven gold and silver markets. The U.S. government is open, and after being partially shut down for a month, however, the government could shut down again in mid-February if President Trump and the Democrats can't reach a deal on the U.S. budget, which includes funding for the border wall. Traders and investors are glad to be able to scrutinize some more fresh U.S. economic data to help drive market prices. The U.S.-China trade war that has been playing out for months this week finds high-level officials from both countries meeting in Washington, D.C. There is no consensus on any progress that may or may not be made at this week's talks. Comments from the U.S. and Chinese officials have been all over the map recently. And I'll pause right there because an agreement has been reached between the leaders of Mexico, Canada, and the United States on a trade deal, but it has to give its blessing to the legislatures in each of those nations. And but my guess is probably those, even in the United States, that hopefully they will approve those trade deals. The political situation in Venezuela is very fluid at present, with the potential for civil violence. The country is a major oil producer. Just before recording this video, there was a White House press conference where both Secretary of Treasury Mnuchin and John Bolton talked about sanctions against Venezuela and former President Maduro, because we, the United States, and Canada as well, do not recognize him as a legitimate leader of Venezuela. Rather, his opposition, the equivalent to the Speaker of the House as president there. This week finds the Federal Reserve's Open Market Committee meeting on Tuesday and Wednesday with a statement on monetary policy on Wednesday afternoon. Markets could become active and volatile following the results of the meeting. And again, I'll note there that the policy now for the Federal Reserve is that no matter whether there's action or not, Jerome Powell will schedule a statement after these meetings, no matter what's happened, whether or not there's any activity at all with regards to raising or lowering rates. The UK Parliament votes on the Plan B Brexit initiative from Prime Minister Theresa May on Tuesday. And it just goes to show you that there's a lot of different things that come into effect that can weigh in on the gold and silver price. And just as Silver Wolverine mentioned in a recent video, and I've said it in prior videos, and I've gotten some flack for saying this, but politics does play a part. Geopolitics as well as domestic politics, it does play a part in the prices for gold and silver, because politics is essentially, it's essentially a psychological game, really. And there's a lot of psychology that comes into play with these markets, which is one reason why I don't take the time to really analyze patterns and get into the intimate details of where things have been with the spot price and get into chart reading a whole lot. The article continues. The outside markets today see the U.S. dollar trading near steady. Meanwhile, NYMEX crude oil prices are lower and trading just below $53 a barrel. There's another effect, another something to watch, the oil markets and what's going on and in other nations with regards to OPEC and the prices of oil and the like. And, of course, the dollar index, the volatility index, all kinds of different factors. U.S. economic reports due for release Monday includes the Chicago Fed National Activity Index and the Texas Manufacturing Outlook Survey. Here we see a chart, 24-hour spot gold. Technically, the gold bulls have the overall near-term technical advantage and have gained power. Prices are in a 2.5-month-old uptrend on the daily chart. Bulls' next upside price objective is to produce a close in February futures above solid resistance at 1330. Bears' near-term downside price breaks objective is pushing prices below solid technical support at last week's low of 1275.30. First resistance today is seen at 1303.70 and then at 1310. So, you take a look at these resistance levels and wedges and candlesticks and everything, but all of that can be thrown aside by the things I mentioned just prior. March silver future bulls have regained their near-term technical advantage. Silver bulls' next upside price breakout objective is closing prices above solid technical resistance at the January high of $15.95 an ounce. The next downside breakout objective of the bears is closing prices below solid support of $15. There's your new floor for silver, is $15. And I think that's going to be hard to break through. So I think get used to $15 silver, in my opinion, for quite a while here. Let's take a look at the prices now. As of the recording of this video, we see silver prices well above $15.50. It's at $15.77 here. Gold is $13.04. Platinum is down a bit at $817. And palladium is down $29, $13.36. It's flirting closer to gold. So we will see what happens here. There'll be more on platinum and the platinum and palladium war. I'll call it. We'll discuss that in a future video. But nonetheless, it is fascinating to see how these prices are moving. Silver, as I've mentioned before many times, it has a dual role. It's both money, and we understand it as such, and we accumulate it, and rightfully so, because it has been used for money for the vast majority of civilization and history in that regard. But it is also a commodity, and that commodity is measured by its use and its demand in the economic sector, in industry, medicine, biotechnology, all sorts of things. And gold, by the way, has a commodity-like qualities to it as well, but it is treasured much more than it is as a use, as a commodity. And that's why you're seeing on this chart right here, it's the only one right here we see going up a penny from the last movement here. Very interesting indeed. So post your thoughts below about the markets, where they're at today, and where you think they'll be in the coming week. We're going to see some news come out as the week progresses here that should have an effect and movement of these prices going forward. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.